Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Tuesday, the 18th of March. I'm Daniel Lam, your host for the podcast. When we look at the rate expectations of the key global central banks, the Bank of Japan clearly stands out. All other central banks are likely to be easing, while the Bank of Japan is doing the opposite. It is expected to tighten its policies. Japan's 10-year government bond yield has risen to the highest level since 2008, despite Japan's fourth quarter GDP growth coming in at 0.6%, slightly below expectations. The yen had been strengthening against the US dollar over the last 2 months, helped by the tailwind of investors' risk-off sentiment in the US and the seeking of safe haven assets. However, the risk-reward in selling dollar-yen at these levels may not be so attractive anymore. The downward momentum has started to fade. Long-term listeners to this podcast would know that I always compare the price level against the relative strength indicator, i.e. the RSI. Well, the dollar-yen has been coming down, but the RSI had already been making a base. That means the power of the sell down in dollar-yen has been weakening. Moreover, the increasing uncertainties surrounding US tariff policies is also heightening the volatility in the US dollar. So therefore, we believe there are better risk-adjusted opportunities in yen crosses, such as Aussie yen. Despite Australia's economic growth surpassing expectations, making its first acceleration in over a year, consumer inflation expectations declined to 3.6% in March from 4.6% in February. Meanwhile, Australia has decided not to impose retaliatory tariff in response to new US duties on aluminium and steel, because the Prime Minister emphasized that such measures could raise domestic cost and fuel inflation. So therefore, we see softer inflation ahead, likely to support a dovish tilted RBA. Now, should Aussie dollar break below its 50-day moving average at 0.6270, short-term downside momentum could strengthen, and potentially driving the pair towards the 5-week low at 0.6187. So overall, this scenario could favor a bearish Aussie yen, particularly if risk sentiment remains fragile. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.